How to trade failing divergence. Failing divergence gives us an excellent opportunity to trade in the same direction of the existing trend. See, this is the early chart of Apple Incorporation. In this chart, prices are trading at same level, but RSI is giving us a negative divergence. With our divergence strategy, we should always draw a support line on the RSI troughs when we get a negative divergence. See, in this case, we are not getting any breakout on RSI support line. Instead, we are getting a breakout on the resistance line of these peaks. And see here on chart where the candles were resisting this line, this resistance line, and we get a breakout at this line. It means that momentum is very high. Now prices will move in the same direction of the existing trend. The existing trend is uptrend. See, this is the uptrend, and then there is a pause in the momentum in the trend. And when we get a breakout at the resistance level, we are getting a sharp up move in the prices. So it is a very good signal to trade in the same direction. At this point, we can make our position when we get a breakout on RSI resistance line. At this candle, we can make our buy position, and our stop loss will be the immediate support level. See, the prices are taking support at this level. This is the level, and our stop loss will be this level, and our buying position will be this breakout candle. Here too, we get a positive divergence in the prices. See, the existing trend is downtrend, and at this point we are getting a positive divergence because RSI troughs are going in upward direction, but prices are continuously falling down, so it is a positive divergence. At this point, RSI is breaking down the support line, so we get a signal of trading in the same direction of the existing trend, and we can sell when we get a breakdown of this support line. See, these candles are taking support at this point, and RSI is giving us a breakout at this point. So this red candle, this breakout candle, is our signal candle, and at the opening of the next candle, we can make our short sell position. The stop loss level should be the immediate resistance level. So this is the stop loss level because these candles are resisting this level. We will take one more example to understand this. See, this is the early chart of Nifty 50. In this chart, the prices are in uptrend. See, the existing trend is uptrend, and at this level, prices are continuously moving in upward direction. See, but RSI peaks are giving us a negative divergence. So, when we get a negative divergence, it means we can expect a retracement in the prices. For this, we will draw a support line for this divergence. See, this is the peak and this is the peak that are giving us a negative divergence. So, we will join the lows of these peaks and see RSI is not breaking down this support line in downward direction. So, we cannot make any short sell position in this case, and prices are continuously moving in upside. At this point, RSI is breaking the resistance line in upward direction. So this breakout candle is our signal candle, and we can make our buy position at this candle. Prices are taking support at this level. See, this is the level. Prices are taking support at this level. So this is our stop loss level, and this will be our buying point. See, here is one more example. Prices are continuously moving in upward direction. Here we are getting a small retracement, but suddenly we get a breakout candle of this line, and this was a gap up opening. Also on RSI, we get a breakout in upward direction at this candle, at this green candle. So we can make our buy position at the next candle because in this case momentum is very high. This is a gap up opening and this is a very long green candle. It means momentum is very high. We can make our buying position here, and the stop loss level should be the support level. This is the support level where these candles are taking support, and our entry position is the opening of this candle. Failing divergence can be found in all the time frames. This is the hourly chart. We will take one example on 5-minute chart for intraday trading, and on that chart we'll see in intraday trading how we can trade the failing divergence. See, this is the 5-minute chart of HDIL, and in this chart prices are struggling at this level. This is a range bound movement, but these two peaks are going in upward direction, but RSI peaks are going in downward direction, so it is the negative divergence. So we can expect a retracement at this candle because we are getting a negative divergence. For trading a retracement, we will draw a support line on the RSI troughs and see there is no breakout on the support line of RSI. It means it is a case of failing divergence because we are getting a breakout on the resistance line of RSI. And we can make our buying position at the breakout candle. See, this was the level of this second peak and this is the breakout candle. So we can make our entry at the open of the next candle, and our stop loss will be the support level of these candles. See, these candles are moving in a range and this is a support level. So this will be our stop loss level and this is our entry position at the open of this green candle, this next candle. And see the momentum in the stock. These three candles are very long candle because there is a high momentum. When we get a failing divergence, it means there is a high momentum in the stock and we don't get any retracement in the prices. See, these three candles are going in upward direction and it is a very sharp up move. So if we get a pullback or consolidation after one candle, we should immediately exit from our trade. This is a case of failing divergence, so there should be a sharp rally in the prices after the breakout. So if we get a consolidation after the breakout, we should immediately exit from our position. In this way, failing divergence gives us an idea to trade in the same direction of the prices. Thanks for watching the lecture.